We have been discussing about insurance, and we looked into different types of insurance. We looked at reinsurance, bank assurance. We talked about moral hazard. Then, yes, at the end I asked, okay, if moral hazard is there, how do you avoid it? Then we talked about no claim bonuses. Then we stopped here. SLDIS, Sri Lanka Deposit Insurance Scheme. Okay, so now I'll give you a few questions, note down, then we'll look at the answers later. First one, write in your exercise book, number 1. Can a specialized leasing company, this has been repeated again and again, can a specialized leasing company accept deposits? Number 2, what is meant by seed capital? What is meant by seed, S-E-E-D, seed capital? What is meant by seed capital? So we are looking at what we have done so far. Number 3, what is the difference between reinsurance and bank assurance? I'll repeat. What is the difference? What is the difference between reinsurance and bank assurance? Question number 4. What are the alternative funding? What are the alternative funding? Fifth question. What is meant by financial intermediation? What is meant by financial intermediation? Please write your answers. So I'm looking at your knowledge on what we have done so far. So I have given you 5 questions. Write your answers quickly, and after that we'll discuss. Then we can move into today's lesson. So I'll give you 10 minutes. Please complete your answers in your notebooks. After that we can discuss. In our normal lecture room classes, I used to give this kind of questions. Then when you are writing, I'll move around and see what you are writing. So this is what we miss in this online. Anyway, I gave you 5 questions to check your knowledge on what we have learned so far, whether you can remember them. So the first one was, can a specialized leasing company accept deposit? So you should remember the division of financial intermediaries in Sri Lanka. From one side, you have central bank regulated institutions, and the other side, the institutions which are not regulated by central bank. So under central bank regulated institutions, you have deposit taking institutions and other institutions. Then specialized leasing companies, SLC, belongs to other area. That means they cannot accept deposits. Then we, yes, just think on that and continue the rest of the answers. We'll start today's session. First, let me know whether you can see this set of slides. If you see them, say yes. Yes, okay. So you can see them. We are going to talk about another area. Anyway, I have to continue a little bit on insurance that I'll do next time. Uh, there are certain principles of insurance like causa proxima, ubdema fide, the utmost faith. So likewise, certain principles we have to discuss. So we'll start with stocks. What is meant by shares? So we use the word shares or we use the word stocks. So it's part of ownership, a part of portion of large amount which is divided among number of people. So that is the normal meaning. Now, when it comes to capital market, one of the equal parts into which a company's capital is divided, entitling the holder to a proportion of the profits. Now we are talking about shares. When we were discussing about venture capital, I asked you a question. Why venture capital is not popular in Sri Lanka? And I said, in order to exit from the ownership, you have to get list. Every venture capitalist want to exit within a specific period. How do you exit after investing? So you have to sell your shares, sell your ownership. In order to do that, there must be well-developed capital market. And today we are discussing on that capital market, that is shares. So first we discuss what is meant by shares. Okay, now I'm asking you some questions. At the beginning, I asked you whether you have a CDS account. Now, those who have CDS accounts, tell me yes. Others, no. Quickly send me your yes, your chats. No, no, no. Quick. Anyone saying yes? Okay. Now, Central Depository System account, CDS account. If you have a CDS account, that means you can start up trading in Colombo Stock Exchange. That is our stock exchange. When you don't have that, that means you can't do trading. First, we'll discuss a little bit practically. You cannot directly buy stocks. You have to buy stocks through a broker. So there are stock brokering firms like Asia Securities, SoftLogic, Equity Partners, Equity Partners. So likewise, there are stockbrokers. You have to get registered. For that, you don't want to pay a single cent. When you are more than 18 years old, that's enough. Then you must have your NIC. Then you must have a billing proof. After submitting all these documents, you can start up trading. You get listed as a participant, so you get CDS account. After that, you can buy shares and you can sell shares. Okay, now what is meant by shares? Theoretically, this is what we are saying. One of the equal parts into which a company's capital is divided, entitling the holder to a proportion of the profits. So if you are a shareholder, you are entitled for a part of profit if the company make profit. Then the place where do trading is known as stock market. The place where buyers and sellers meet in order to sell their ownership stakes, that is share market. Now, let's say we all are living in 1700. Ship voyages has become a very profitable business. Suppose you own a ship. Now, if you leave your country, say you are living in UK, Great Britain, and you own a ship. If that ship moves into east and land to Ceylon, those days you call it Ceylon, and if you can collect elephant tusks, pearl, gem, spices, and go back to your country, Great Britain, and sell the stuff you have collected from Ceylon, you are very rich. But at the beginning, we said higher the risk you undertake, higher the rewards you get. So if you are living in Great Britain and if you only do farming, your risk level is very low and your return is very low. You will get uh, something for your crops. But if you own a ship and if your ship moves out, if you are the owner of the ships, you need not to be the captain of the ship. You can recruit someone, head him, so he will become the captain of the ship, and he has a crew, a team. They will go to a country called Ceylon, get all these required items to sell, and they come back to your country, Great Britain, and you sell your stuff there. But it's very profitable. You being the ship owner, you can enjoy a huge profit, but there are a lot of risky factors involved. The ship may capsize, ship may be taken over by sea pirates, and when you go to the country, there may be a lot of wars, struggles against you, and your life is at stake. There may be a lot of different animals, unfriendly people, and when you come back, you are not sure about the weather. Storms may capsize, storms may badly affect. You may drift it into an unknown destination. So all these are risks involved. Now let's assume there are about 100 people who own the ships, okay? And you are one of them. How do you reduce the risk and increase the reward? In the chat room, send me your messages. You are the ship owner, you only have one ship. Collectively, in your country, the rest of your colleagues have 99 more ships altogether. There are 100 ships, but you only own one ship. If your ship goes to your destination, collect the relevant items, come back to your country, you are rich. But until your ship comes back, you are not sure. Maybe you are losing your entire wealth. And the dictum is higher the risk, higher the rewards. But you are very creative. You want to reduce the risk, and you want to reduce the risk, and you want to increase the rewards. How do you do it? Think and send me your answer in the chat box. Being a ship owner, how do you reduce the risk and increase the reward? Insurance. Now, the era which I'm talking about, there were no insurance companies. Today, I'll agree with your answer, but those days, there were no insurance companies. Now, how do you, still you want to reduce the risk without having an insurance company and increase the reward? Think and tell me your answer. Now, insurance is out. Remember, man is very creative. Even though we say higher the risk, higher the reward, man wants lesser risk and higher rewards. Others, Karindu made an attempt, but I would say insurance is not the answer here. In today's context, yes. I own one ship, you have another ship, and collectively, let's assume there are 99 ship owners, each own one ship. What can we do now? can we act as a team, pool? Now we have 100 ships, okay? And I will own one ship out of this 100. Agreed? Now, if the ship is divided into 100 portions, I own one portion of my ship. And there are 100 such ships. Mathematically, 1 divided by 100 into 100 means I still own my ship, one ship. But physically, you can't show the ship. Got it? We are sharing our ships. Mind you, we are sharing our ships. Now the risk is less. I own a piece of paper known as share certificate, which says, let's assume my ship is named I06 ship. I own now one portion of 1 divided by 100 of this ship. The ship has 100 shares. I own one share certificate. Likewise, now I own 100 share certificates. Physically, I own nothing. But paper-wise, I own 100 pieces of papers. That is sharing. Now, what will happen if my ship capsized? I lose not my entire wealth, 1% of my wealth. The balance is active. Means what? Because of sharing, now I have reduced my risk and I have increased my rewards. Okay, so this is what sharing is. If you start to share, you will own different companies, different ships. Each ship has a risk, but the probability of losing the entire fleet of ships at once is very low compared to losing one ship. So we started to share. Now sharing has reduced my risk and has given me more chances to increase my rewards. But now I come across with a problem. Suppose I want to sell my ship. Can I sell my ship now? What do you say? Can I sell my ship now? I said physically I don't own anything. Now I cannot sell the physical thing called ship, but I need cash. I'm in a hurry. What can I do? I can sell the piece of paper, which is known as share certificate. And soon it started to trade these certificates. So that is where share trading takes place. The stock market is the place where you buy and sell shares. It is also called stock exchange and works like an auction. So when you get into auction, what you do? You set a price. I'm ready to sell at this price. Then there are buyers. Buyers would say, we are ready to buy at this price. Then we collectively start to negotiate. When I set the price, someone will buy at my price tag. Then the share is traded. Sometimes no one is ready to buy at my price, so the share is not traded. So it comes share trading. Okay, so there's a slide showing bull and bear market of our stock exchange, Colombo Stock Exchange. And you can see the heading, the bull and bear market. Now you can see the movement of ASI, All Share Index. Due to various political and economical reasons, market goes up, market comes down, market remains stagnant, then market start to move up, then market start to climb down. So these are the movements of a market. Okay, so you can clearly see these movements. Market is going up, market is coming down, or the market remains stagnant. You have seen these symbols in front of stock exchanges, and we use the word bull market and bear market. Okay, so what is meant by bull market? Bull. Can someone tell me what is meant by bull market and what is meant by bear market? So these are the pictures. One is a bull, the other is a bear. Earlier you could see the movement of market going up or coming down. Now bull and bear. If you can say answer, say it. If not, yeah, let me explain what is meant by bull and bear. Okay, now you can see a fight between bull and bear. Bull is waiting to attack, bear is waiting to attack. Very good. I got a correct answer. Where the stock market is going up, you call it bull market. When the stock index comes down, you call it bear market. Correct. That is the answer. For those who do not know it yet, let me tell you with an metaphor, a picture. How does a bull attack? Look at the bull. Bull will lower its head and push its head up, attacking with the horns. So how does a bull attack? It pushes what is down into upside. Okay, so whenever bull want to attack, it lower its head, then push up what is staying in down. You have seen that in bullfights. In Spain, there are a lot of bullfights. The bull pick with its horns what it is down and push it up. So bull means pushing up. Now think, compare that with the bear. How does a bear attack? When bear wants to attack, it stand up, take the pose, and what is up is pushed down. So bear is pushing down what is up. Okay, so you get the meaning of bull and bear market. So remember that bull always push up what is down. Bear always push down what is up. So in the stock market, you see these two competing symbols fighting each other. Now, why does price of anything goes up? Price of a particular material goes up. Why? In economics, they say something very nice. Why does the price goes up? I'm looking at the chat room. Can someone tell me? Inflation is one reason. Yeah, Ramachandran, this is what I wanted. Higher demand. When economically, when there is more demand than supply, price goes up. When there is more demand than supply, price goes up. During this COVID pandemic, when it started, every bank wanted to purchase forehead thermometers, and the supply was less. Now what is happening? Many people have imported forehead thermometers and price is coming down. When this COVID started, pandemic started, we were looking at hand sanitizers. And the 4-liter can, the first 4-liter can, we purchased at 3,000 rupees because no one was interested in hand sanitizers then. All of a sudden, within 2 days, everyone wanted hand sanitizers. The next quantity we purchased at 6,750. It has doubled. Why? Less supply, more demand. So the supply gets the benefit. And started to perform even during the curfew days, and we found masks are not available. The first set of masks, washable, we purchased at 130. And after 1 week, we found another supplier who is ready to sell it at 100 rupees. Now, the same you can buy at 60 or 50 rupees. Means what? The more supply comes, price goes down. Okay. Now, we are referring back to our bull and bear, and we said what? Bull represent going up. Okay. What we discussed there applies to the market as well. Why does price of a particular stock goes up? Why does the price of a specific share goes up? Tell me the answer. Why does the price of a specific share goes up? Yes. Yeah. Price of a share goes up when there is more demand. Correct, Tarindu? Increasing of demand. Now, at this moment, will you buy shares of hotel industry? At this moment, will you buy shares of hotel industry? No. No. Why? Why? Now the prices of entire hotel industry has come down, less demand, and less demand for hotels, yes. Therefore, we believe when we see the next quarter report, hotel industry has not performed well, and we predict that. Therefore, we believe when we predict that, we believe there will be less demand to the hotel related shares in near future. Okay. Note down those who have, I have asked you to come up with a exercise book. Note down bull market, bull market, market index, market index moves upward, market index moves upward as there is more demand, as there is more demand for shares, for shares. Full stop. Buyers believe, buyers believe, buyers believe that it is better to buy now. Buyers believe that it is better to buy now. Buyers believe it is better to buy now, as prices may move up, as prices will move up, as prices will move up. Okay, so I'm going to buy shares, and the entire index is going upward. If you look at a certain period in Sri Lanka, from 1993 to year 2006, this is how ASI moved. ASI means all share index. All share price index moves upward or downward based on the collective mentality of buyers and sellers of the stocks. Now you can see certain incidents and how after that things changed. Remember, market is not political. You may have different political views. There is election coming on. You may support different political parties, and that's your personal thing. But market is not political. Market moves upward or downward based on collective mentality of the investors. So when there are more buyers believing that the future economic is good, then the trend will be upward. We call it bull market. And when the buyers believe the future is not good, then they start to sell. Then the market comes down. We call it bear market. We are talking about bull market. Write down. When more buyers demand shares, when more buyers demand shares, and less sellers willing to sell, market moves upward. Market moves upward. Okay, so let's look at this chart. This is the past movement of Colombo Stock Exchange, and we can see after 1993 May, 1st of May, market started to move upward, and after some time there was a political power change in 1994. You can see it in the graph. Immediately the market started to respond negatively and the market started to come down. Okay. Now tell me, why does the market comes down? Why does the market start to come down? You call it bear. Now immediately after one political incident happened in 1994, you can see the immediate reaction. Market comes down. Why does the market comes down? Because there are more sellers. Why there are more sellers? Because they collectively believe it is better to sell now than in future, because in future the price will further come down. So they start to sell now, and a rally of bear startup. So we call this bear rally. Bull rallies, bear rallies. Market is coming down, and what they predicted has become true. It would have been better to sell at this point than to sell at this point. And the market remained stagnant until somewhere in 2002. All of a sudden, markets start to move up, and that's a very long bull rally. Almost 2 odd years, there is a bull rally in Colombo Stock Exchange. After that, you can see a drastic drop. Then again, another political change, but this time again, upward movement. Okay. Now, if you are a shareholder, what do you want? You want not the politics, but the profit out of these movements. Okay. So if you are a shareholder, you are not interested in these political incidents, but you are interested in how to make profit out of these market movements. Now, if you are a share trader, how do you make profit? Forget about share trading. If you are trading anything, how do you make profit? Maybe spices, maybe gem. How do you make profit in trading? Tell me your answer. By selling it. Yes. Now, if you sell at the same price you purchased, can you make a profit? If you sell, no. Very good. So how do you make a profit? By buying at how do you make a profit? By buying at low and selling at, yeah, you buy at low, sell at high. Now, let's go back to our slides. Here, market is going up and you have reached the top. Everyone is interested in market. Now, all of a sudden, market has come down. No one wants to buy shares. This is why market has come down. Here, LTT attacks Columbia Port. Market has come down. Now, if you want to make a profit, when should you buy? During a bull or bear? If you want to make a profit by investing in stocks, when should you buy? Bull or bear? Okay, very good. I got this. You have two conflicting argument. Bull or bear? Very good. That's what I need. When should you buy? During a bull market or during a bear market? If you really want to make a profit, when should you buy? Bull or bear? Someone has said bull, another bear. So there's a conflict of interest. Okay, so it's very clear. If you purchased here, let's assume you purchased a share at 300 rupees and hold it for 2 years and sell it for 2,640. You purchased for 300 and you sold it after holding for 2 years at 2,640. You make a massive profit. And that's not a return a bank can give you. Now, if you have deposited 300 rupees and if you get 10% return per annum, you get 30 rupees. And if you hold it for 2 years, you get 60 rupees. And your return is plus the capital is 360 rupees. But if you invested in stock exchange when it was low, you purchased at 300. After 2 years, you sell it at 2,640. Contrast to that, if you compare with that bank, still your value is 360. By investing, you get a very high return, 2,640, many times higher than the bank. This is interesting. If you buy at bear and sell high at bull, you can be rich. Okay, can someone tell me the names of these two gentlemen? Make an attempt. This is a Mexican guy and he became the world's richest man once. This is a Sri Lankan born business person, a Sri Lankan born, and became the richest man in Malaysia many times. Okay, so I showed you two faces. Tell me at least one. And you're Sri Lankans, and you must be proud of this gentleman who has become the richest man in Malaysia many times. Can someone tell me name at least one of them. Very good, Ramachandran. Carlos Slim. That's the Mexican guy. Correct. Very good. Now I want the name of the other gentleman. He's a Sri Lankan born Tamil person. Anand, yes. Anand Krishnan. Okay, right. Now they are investors. Slim Carlos became, while living in Mexico, not a developed nation, he became the world's richest man few times. What is the secret behind them? Yes, what is the secret behind them? What have made them such rich people? Investing. Investing have made certain people the world richest. You heard about Warren Buffett, the world richest man, many times. He has been investing since the age of 16 years old, and he says, I was too late to start up investing. Okay, means what? In your lifetime, if you start to buy at low and sell at high, you can be rich. And I showed you one nice example with our own country. Now I'll ask you a question. When do most people buy? During bull or bear? When do most people buy? During bull or bear? Yes. Most people buy during a bull phase. Correct. What will happen to you when you buy at bull? When you buy, when everyone is buying, okay, when everyone is buying, what will happen to you? Now you can see here, top of the mountain, highest demand. Everyone wants a piece of shares. If you buy at high, okay, another example here. If you buy here, you pay, let's assume, 1,420 rupees. In 1994, if you purchase something at 1,420, you have to wait until 2004, 10 years to see at least you reach the level of your investment again. Till then, you see a massive loss. What you purchased at 1,420 is selling at 500, many times lower. And how long? For 10 odd years, the market remains stagnant. But people buy more when the market is going up. Yeah. Now, we all believe market will further and further and further go up. But historically, you can see it always moves in fluctuations. Goes up, comes down. Goes up, comes down. Okay. During this corona pandemic, throughout the world, latter part of March, we saw the same pattern. Everyone want to buy or sell. Yes, everyone want to buy or sell. During the pandemic, during the last 2 weeks of March, everyone, those who have invested in stocks, wanted to sell, creating drastic drop. And we found very few buyers. Very few buyers. Now, if you understand these cycles, what you should have done during these 2 weeks by yourself, you should have purchased, right? By now, most of the shares have recovered, even in Colombo Stock Exchange. Okay. Now, one simple example, there was a share called Ceylon Development. The code is CST. That was trading about 11 rupees. All of a sudden, thanks to this pandemic, it went down to 8 rupees. By now, it's trading again at 11.20. Okay. Means what? People behave in herd mentality. I do what others do, and what others do, they do, I do what I do. We act like buffaloes, herd mentality. And when everyone want to buy, I also want to buy. When everyone want to sell, I also want to sell. And that is the secret of becoming poor by investing. And the majority falls into that. I want to buy when everyone want to buy. I want to sell when everyone want to sell. And I will remain as it is, so I'll become further poor by investing. Very few people decide when to buy, the right time to buy. The right time to buy is when others are selling. Now look at some examples given in Colombo Stock Exchange. You could have purchased at this and sell at this. But this is not the way majority behaved. The majority always want to buy at high, sell at low, and blame the governments and say, if not of the government, I would have become so rich. And they always end up blaming the government. Our duty is not to look at whether government is right or wrong. In this investment world, we want to get the benefit. Okay, now what we learned here applies to any commodity. Now we look at what are our assets. Assets. Write down it as a question. What are the two types of assets? What are the two types of assets? Number one, real asset. Number one, real asset. Number two, financial asset. So now you know the two types of assets. The first asset category is known as real asset. They are mostly tangible. You can feel them, you can touch them. Machinery, factories, vehicles, offices, they are real assets. Sometimes there can be few intangible assets like trademarks, patents. Then there are financial assets. Another term for financial assets is paper assets, because you don't have anything physical, only a piece of paper. Earlier we talked about a ship. Having a ship is a what? Real paper. Having a ship is a real paper. It's a real asset. It's real. Now you turn it to ownership certificate, share certificate. Now, having a ship is a real asset. Having a share certificate is financial or real? Financial or real? It's a financial asset. Okay. The firms finance its investments in real asset by issuing financial assets in the debt market for investors. A share of stock is financial asset which has a value as a claim of the firm's real asset, and the income of those assets will produce. A bank loan is a financial asset. Okay, tell me some examples of financial assets. Check me some examples of financial assets. They only come in paper form, so you call them paper assets. So what are they? Tell me some examples. Now, real assets are physical things. Okay, treasury bill is a paper asset. Very good. Type some more. They come in paper form. Today, we are talking about paperless society, scriptless, so you don't have even the paper. Fixed deposits, correct? That's another example. Okay, so all the things which come in paper form, it can be promissory note, commercial papers, debentures, treasury bills, fixed deposits, share certificates. All these are financial assets. The value of these financial assets is determined by the real asset associated. In our example, ship is the real asset. The share certificate of the ship is the financial asset. Without having a ship, this paper has no value. Okay. Now this cartoon says you something. See, our stock options are not totally worthless. They make great paper planes. Okay. So there's nice statement. All paper assets will one day reach its intrinsic value. That is the value of the paper. Okay. Now think about currency. Maybe you're having 5,000 rupee note. That's nothing but a piece of paper. But it is a paper asset, and you can buy any physical things worth 5,000 rupees by exchanging this piece of paper. Okay. Now I'm asking you, will this 5,000 rupee note you are holding will become a worthless asset like this one day? I'll tell you some nice examples. Once there was two different countries known as East German and West German, and they united. There was a cut-off day for East German people to convert their currency into Deutsche Mark. That's the West German currency. Okay, and there were, due to various reasons, there were people who could not exchange it into Deutsche Mark before the cut-off date. And there's a nice movie, Goodbye Lenin. In that movie, one young person, all of a sudden, his mother gave him a bundle of a huge bag of currency notes and say, go and convert into Deutsche Mark. He take it, put it on the bank counter and ask, can I convert them into Deutsche Mark? Then the bank says, sorry, you are too late. Okay. Then the boy asks, what can I do with this money? It's paper. Then I'll tell you another example. Once Saddam Hussein invaded Kuwait. Yes, Kuwait. And he became the owner. Now for a few days, there were no country called Kuwait. It's part of Iraq. And there were many Sri Lankan housemates who came with Kuwait dinar, which has no value. Since there is no country called Kuwait, its currency has no value. If you want to look at some nice examples of that, you can look into a movie called Airlift, the Hindi movie, Airlift. Okay, so what can happen to paper assets? One day it may reach intrinsic value, but not the physical assets. So this is what the cartoonist want to point out. So this is the maximum risk we are undertaking by holding paper assets. But remember, the world has more paper assets, maybe many times than physical assets we have. So that's part of assets. And our business here is share trading. Share trading is trading a financial asset, not physical asset. Okay, so we are looking at regulating stock trading. What do you see from this side? Bull or bear? The area which I've highlighted. Is it a bull or a bear? Yes. Remember, we call it market crash. Just look at this. If you can refer to charts of corona pandemic, of almost all the share trades in the world, you can see this. We call it a crash. All of a sudden, market drops by huge number of points. We call it a market crash. Means what? Everyone want to sell now than tomorrow. Now itself, just now, sell it at any level. Don't look at the value, sell it now. And market crash. Why do people sell in such a unjustifiable manner? Look at the highlighted area. Why do people behave this like this? Yeah. Tell me, why do people quickly give up everything? Why do people rush out to sell? There's a nice word we use for such situation. What is the word? Panic situation. People panic. Why do people panic? Okay. So in our lifetime, we have seen the same because of fear. Okay. People panic. Yeah, I got it. Very good. Fear. Very good. So you got the right one. Cannot handle the risk. Okay. Now here you can see the other side. You said it very correctly, Taridu. You said fear. Now look at the other side. Why do people buy at very high prices? You said people sell out in a panic because they fear. Now tell me, why do people buy at such a rally, creating such a rally at unjustifiable high price? Tarun, you can say the opposite of fear. What is that? You fear, that's why you panic and you sell now and get out of the market. But when the market is going at an unjustifiable higher rate, you all want to buy. Why? Because you are What is the word? Maybe opposite of fear. You want to buy even at the very highest price, believing you can sell further high. What is happening inside your mind? You have become very greedy. Yeah, it's not just overconfident, it's greedy. Greedy. I want to kill the market now. I want to be the richest now. It's very simple. I can buy and sell at very high price. Okay. So greed, greediness, fear, they both send the market up or send the market down. Send the market down or send the market up. Your psychological thinking. Okay. Now, if you can get rid of fear and greediness, you can become either a person like this or like a person of his son. Okay. Now, who is this? We said Anand Krishnan. Anand Krishnan, the richest man in Malaysia many times, and he has overcome fear and greediness. Therefore, he knows how to play in the market, and he has become the world richest man. Sorry, richest man in Malaysia. He has only one son. Okay, so the richest man in Malaysia, Anand Krishnan, he has only one son. Father has overcome fear and greediness, and he became very successful business guy. His son, only son, he has also overcome fear and greediness. Who is he? What is his occupation? Can anyone make a suggestion? Son of a richest man, he also has overcome fear and greediness. What can he be doing? Okay, right. So without wasting time, let me tell about his son. His son is a Buddhist monk who owes nothing. He has also overcome fear and greediness. Father has gone to one extreme and son has gone to the other extreme. So son is a Buddhist monk in Thailand. Father is the richest man in Malaysia. Okay, right. So we were looking at the psychological aspect of market moving up and market coming down. Anyway, market crashing. What will happen after a market crash? You can see market comes down and quick recovery. We call it bull trap. It seems the market has recovered, but we call it a bull trap. Then a drastic decline. But the worst is yet to come. The market did not recover until 1954. The market crashed in 1930 and it failed to recover until 24 more years. Okay, so this is the risk you're undertaking. Now, let's assume you are 25 years old and you have 5 million. Your father has given you 5 million. You invested the entire 5 million in stock market, and immediately after your investment market crashed down, you have to wait for 25 more years to see that your asset value is going back to your initial investment value of 5 million. By that time, you are 50 years old. Now, that is why we call market is a very risky place. Okay. This is why regulating of stock market is needed. Now, this is called margin trading. We'll talk about it. It's a way of financing your market portfolio. Suppose you have invested 5 million of your own cash in the market then the bank is ready to give you another 5 million. So 50% contribution by you, 50% contributed by the bank. Altogether, you get 100 entirely invested in stocks. If you have this facility, when the market goes up, you use more margin, you get more loans, and you can demand more, and you can demand more, and you can demand more. Means what? Now we are buying based on others' money, the bank's money. Bank is giving you a margin facility. And since you can demand more, earlier you can demand only 5 million. Now you can demand 10 million. When you demand more, price goes up. The more price goes up, you see your asset value is going up. The more your asset values, the bank is ready to give you more loan. The more loan you get, the more you demand, and the market price continuously goes up until one day you find there are no buyers in the market and the market crashed then. What will happen after that? When a market crash, you lose faith in the market. This is what Mark Twain, or the Samuel Clemens, a favorite author of US, said after the market crash. So October, now the market has crashed in October. Then he said, October is a very bad month for investing. Then there are other months. Okay, so he zigzag all the rest of 11 months and put that. So means what? Once you burnt your fingers by investing, you would say never ever invest. Investing is gambling, like how Mark Twain put it. Now you lose confidence in stock market. What is happening? When you lose faith in capital market, you don't want to get involved. And you start to say, stock trading is nothing else but gambling. It's better to play casino than investing. Now what happened to the economy? Venture capitalists are no more interested in giving their money to Steve Jobs to start Apple because they cannot sell that in stock market. Stock market is not performing well. Then it affects to the entire economy. That's why stock markets should be regulated and these kinds of crashes should be prevented. Remember, when you know it's better to buy at low and sell at high, you can artificially do that. You can artificially create bears, you can artificially create bulls, and you can make profit out of that. So the market should be regulated to prevent manipulation on retail, small investors. That's where regulations come. What is IPO? We have discussed that earlier as well. IPO means selling a company's shares for the very first time. Now we said a venture capitalist will invest in a company and grow it, and he want to list it in a stock exchange. So that is the IPO, initial public offering. Offering a share for the very first time to the general public is known as IPO. And most of the time, venture capitalists prefer to get out of the market by selling their ownership to general public. An IPO will give a chance for the company to add fresh capital from general public. We'll read it. An initial public offering referred to simply as an offering, or we use another nice word, floating. We call it listing or floating. And we are selling common stocks for the public for the very first time. So that is IPO, initial public, initial, very first time. They are often issued by smaller, younger companies seeking capital Okay, even privately owned companies looking to become public traded. That's where the venture capitalists come. Privately owned, Apple Computers was privately owned, and the majority belonged to Mike Makula, and he want to sell it. Privately owned companies sell it so they can be publicly traded. In an IPO, issuer obtains the assistance of underwriting firm, which helps to determine what type of securities to issue and best pricing, how to get that from the market. Okay, so there is something called underwriting. Right. Now let's assume Mike Makula and Steve Jobs started a very small private company, and they were performing well in the market, revenue is going up, and now they want to list and one want to get out of the market. They go to a underwriter, another firm, a capital firm, and say, we want to list our company, help us. Now the underwriter says, you have to sell your share at this price. This is how you should promote it. And this is the best time to sell or get listed. Now I'll tell you some examples from Sri Lanka. People's Leasing and Finance Company started its business as a private company. So you had People's Leasing Private Limited, and that was a specialized leasing company. A specialized leasing company cannot accept deposits from the general public. And it slowly started to grow up, and it got the finance license. And it became People's Leasing Company Limited. No more private limited, limited liability company limited. And it acquired a listed finance company known as Ceylon Merchant Leasing and became finance license holder. And after some time, it wanted to get listed in Colombo Stock Exchange. So People's Leasing and Finance PLC came up with 8 billion Sri Lankan rupee IPO issue. That is the second biggest IPO of Sri Lanka. The first is Dialog. Now 8 billion is a huge amount. You want to successfully end up where all possible people subscribe for that. So you go for the underwriter. So you go for the share underwriting company, let's say NDB Capital. Now share underwriter undertake to purchase whatever the remaining shares which the general public has not subscribed. Okay? Now let's assume People's Leasing Company want 8 billion Sri Lankan rupees from general public, and the general public subscribed or purchased shares only up to 7 billion. 1 billion is remaining. The company need 8 billion, market is ready to give you only 7 billion. 1 billion deficit is here. The underwriter undertake to ensure full subscription of 8 billion. So whatever the amount remaining in the market, here in our example, 1 billion, that will be purchased by the underwriter. So that is one duty of the underwriter. In addition to that, he will perform many other duties. He would say, this is how you should market your share. Right? So you have to sell your shares to the general public. How do you do it? Now we have to prepare the booklet called prospectus, showing all your information, last 5 years profit of the company, how your company is managed, what are you going to do with this new 8 billion, what is the future, what is the risk of buying shares of this company. Everything is noted in a book called prospectus, and the underwriter prepares it. Now there is a lot of documentary process in getting listed with SEC, Securities and Exchange Commission. Underwriter will help you in that. Further, they would say this is the ideal price. You can sell your share at 18 rupees. So that is the advice. Further, do it in 2011 December. And what you must do is you have to categorize your shares into different categories. You can sell this much to employees, this much to outside funds, this much to retailers, this much to foreign funds. So likewise, they will advise you. That entire process is known as share underwriting. This is what we said. Okay. So in your books, I'll give you this question. What is meant by share underwriting? Write down. What is meant by share underwriting? Continue. What is the role of ROLE? What is the role of underwriter during an IPO, initial public offering? What is the duty of an underwriter during an IPO? So what are your answers? Number one, ensuring full subscription. Ensuring full subscription. Number two, developing the prospectus. Developing the prospectus. PROSPECTUS. Developing the prospectus. Number three, advising on the share price. Number four, timing of the share issue. Timing of the share issue. So you can say this is the best time, we are entering into a bull phase, or don't go for IPO during this era. We are heading for the bear market. No one will be interested in shares these days. So that's their advice. Okay. Then number five, conducting promotional campaigns. Conducting promotional campaigns during an IPO. Okay. So these are the activities of a share underwriter during an IPO. Okay, so we are discussing about shares, and now you know share is not a physical thing. It's a finance asset, a paper asset that can be traded in a place called stock exchange. In Sri Lanka, you have Colombo Stock Exchange, and you can get listed in a stock exchange by way of an IPO. IPO means initial public offering. Initial public offering means issuing share to the general public for the very first time. And this is a lengthy process. You need an assistance of someone, and that someone is known as share underwriter. And now you know the duties of the share underwriter. Okay. Now, by selling shares to the general public for the very first time, you can take capital into the company. Let's say People's Leasing Company becomes a listed company, and 8 billion rupees get into the business. Okay. After that, People's Leasing came with price of share 18 rupees. After that, I, who purchased at 18 rupees, is ready to sell you at 20 rupees, but you are not ready to buy. Okay. So the market timing was perfectly advised by the underwriter. After that, we entered into a bull phase. Now what happened? Those who purchased at 18 rupees could not sell anything more than that. For 2 odd years, the market started to come down, and that was the bear phase. So if you have purchased at 18, either hold it or sell at finally 10 rupees, making a nice loss into your pocket. But after that, again another bull phase started and PLC share went up to 26 rupees. Now, if you have purchased it at 18 rupees, you sell it at 26 rupees, you get 8 rupees profit per share. Now, my question is, what is the benefit to the company? What is the benefit to the company when the price of the share goes up to 26? Whatever the reasons you mention, no financial gain will get into the company. The only gain the company get is 8 billion at the IPO. After that, the share trading price has only profit to the traders or the investors, not to the company. Now, let's assume this company need another 4 billion. How can they raise it in the market? You can only once go into listing, that is known as IPO, initial public offering. The same company cannot do two public issues, only once. You get 8 billion capital inside only once. But after getting listed, you need money from the general public again. For that, you have another option that is known as rights issue. So in your notebook, write down rights issue. Write down. An existing shareholder is given the right, RIGST, right, within bracket, a privilege, within brackets, a privilege, close brackets. An existing shareholder is given a right to purchase additional shares below the market value, full stop. Now let's assume you have purchased People's Leasing shares at 18 rupees per share, and let's assume now the share is trading at 20 rupees. You are the existing shareholder, you have 1000 shares purchased at 18 rupees. Share is trading at 20 rupees. The company, People's Leasing Company, need more money from general public as a way of equity, capital. So you don't want to pay any interest for that. You being an now they cannot go for another IPO. The only source is selling it to existing shareholders. So the existing shareholders are given a privilege to buy further shares from the mother company at a price below market value. Suppose you can buy additional shares at 20 rupees from the market from another investor. If so, you will buy from him. Okay. Now the company is ready to issue more shares. So they definitely have to issue it at a price below the market value. So if you can buy at 20, if the company gave you a right to buy at 15 rupees, okay, the company is giving you you being the existing shareholder, you are given a right to earn a profit about 5 rupees per share. And when you buy it, the company will get capital inside, capital into the company. Okay. Now, if you are an existing shareholder, when you have this right, you can exercise it. Means what? You can buy the share, or you can sell your right to the others. right to the others. Okay, let's read this. A right issue is an issue of an additional shares by a company to raise capital under a seasoned equity offering. The rights issue is a special form of shelf offering or shelf registration. With the issued rights, existing shareholders have the privilege to buy specified number of new shares from the firm at a specified price within a specified time. Okay. A rights issue is in contrast to an initial public offering where shares are issued to the general public through market exchanges. Closed-end companies cannot retain earnings because they distribute essentially all of their realized income and capital gains each year. They raise additional capital by rights offering. Companies usually opt for rights issue either when having problems raising capital through traditional means or to avoid interest charges on loan. Okay. Now, this is something published in a newspaper in September in 2011. People's Leasing announces 560 million rights with warrants. PLC board yesterday resolved to recommend to shareholders a rights issue of one new ordinary share for every two held. Okay, if you hold two People's Leasing shares, you will be given one right. So this is what we said earlier. We said specified number of new shares. Here, that is specified one share for two shares you hold, and a specific price is given. Okay, we were talking about shares, and I said share price can go up, share price can come down. And I said people can artificially manipulate share prices. These manipulations often become bubbles. You have seen bubbles, soap bubbles you have seen. There's a movie called Money Never Sleeps. In this movie, you can see many times people are blowing air bubbles, okay, soap bubbles. What happened to these bubbles? Will they remain forever? When you are a kid, you have played with these air bubbles, okay. What happened to these bubbles? Go back to your childhood. You are blowing soap bubbles, air bubbles, and they are floating here and there. Very good. Bubbles burst. Okay. So this is what happened to them. They never remain forever. They become bigger quickly, float and burst. So our understanding is all bubbles burst. In stock market, when price of one company or maybe the entire industry or maybe the entire market moves up all of a sudden without proper reasons to assign, we call it market is bubbling up. And our dictum, our law is all bubbles burst. What is happening here? Market is going up, up, and all bubbles burst. At the top, it burst, and you call it crash, comes down, down, down. All bubbles burst. Okay. Now, there can be some people who are not real, genuine, honest business people, but they create companies and artificially increase its price up, sell it to the general public, get out. They are not interested in running a business. They only worry about how to increase the market price of a share. Okay. And They only want to inflate the share price, further, sell it, and it will burst. This is one example. So these are the main stages in a bubble. We are referring not the soap bubbles, but the bubbles in the stock market. First, the market will slowly move up. And the first people who purchased at a very low price, seeing a nice gain of 10-20%, sell it. And the market falls back to its earlier level. So we call it bear trap. Awareness phase. Okay. There is a company called XYZ, and I invested in this company, my dear. Within 2 weeks, I got 20% gain. If I invested or if I went for the fixed deposit, I would have waited 2 years to see the same gain. 2 years, mind you, 2 years, here I got it within 1 week. So that is the first part, awareness. Now people start to talk about XYZ company is really good. They have given 20% return within 2 weeks. Now, there's a bear trap. You know who is bear? Okay, push down. Now, slowly it is going up. Now comes the panic era, mania. Everyone want part of this success. Here comes a share which is going up. Or here comes a market where it's continuously going up. Mind you, year 2009, we ended war, and year 2011, Colombo Stock Exchange was the second best performing stock exchange in the world. You get media attention. Now what? I want a piece of this success. I want to invest in Colombo Stock Exchange and I want a return. And not only Sri Lankans, but foreigners also start to buy. It's a panic. It's the greedy phase. It's greed. Everyone want to buy. Okay. Now comes a situation where you call new paradigm. My God, Sri Lanka is the next developing Asian tiger. Look at its stock exchange. 2011, we are the second best performer, and 2012, we will be the best economy in Asia, and we will be the best stock market in the world. Good. That's the illusion. Now, believing all these things, I purchased shares at unnecessarily high price, and I all of a sudden find there are no buyers. Now what? Start to climb down. And very soon, there'll be nice articles in newspapers. What was trading at 375 rupees is now trading at 200 rupees. Investors, if you buy it at 200, you will get a good return. Now, once again, people start to buy. So we call it a bull trap. But it cannot sustain. Now fear cycle comes. Greed and fear. Greed and fear. Then there is panic, like what happened during COVID-19, which you experienced a few days, maybe a few months earlier. Everyone want to sell. Now the market is falling down. It falls down than the usual level. Okay. Now, if you want to be the investor like Warren Buffett, Anand Krishnan, or Slim Carlos, when should you buy? Not even during the normal phase, but during this disaster. Okay. Remember, by that time, there are no one to buy. Everyone is avoiding market. When Corona pandemic hit throughout the world, everyone is avoiding the market, and very few people were buying. And those people have gained a good profit by now. Okay, now I must tell you about this dot-com bubble. Somewhere in 2000, Forbes magazine ran a nice article, youngest, richest people, and they talk about young people who has become billionaires, and all of them have started IT-related companies. Very soon, everyone wanted a share of IT company. Then in Nasdaq or Dow Jones, people got listed IT-related companies. So these are them. And most of these companies' name ended with .com. And the owners of these companies were not interested in developing superb IT-related company, but they were interested in inflating the share price in the stock exchange. And it happened. And everyone is buying IT-related company. By that time, the well-known investor Warren Buffett, he avoided stock market. He avoided buying IT-related companies. Then the analysis said Warren Buffett is too old. He's too conventional. He can't understand the new trends. And everyone was blaming Warren Buffett, and they were buying IT-related shares. And they were like bubbles. They grew bigger, and burst. 2.7 billion was lost in 10 failed dot-com companies alone. American dollars, 2.7 billion worth shares burst. So this is what happened. Now after that experience, a cartoonist came up with this. The dot-com bubble had burst, but there is no panic. Everyone knew that there would be another bubble coming along any minute. So they are ready to suicide, buying at high and losing your wealth. Okay. Now this shows bubbles taking place out of stock market. This is a real product. Oil, the same scenario. Going up, falling down, bull trap, falling. Okay. The same happened to COVID-19. Oil price went to negative values. Okay. Now we are referring to SEC, Securities and Exchange Commission. The Securities and Exchange Commission of Sri Lanka was established by the Securities Council Act number 36 of 1987. The SEC now issue licenses to stock exchange, stock brokers, dealers, unit trust management companies, and register underwriters, margin providers, credit rating agencies, investment managers, and security clearing houses. Okay, my dear, for your exam, if you asked what are the institutions regulated by SEC, these are the institutions. So you must remember them. The objectives of SEC: the creation and maintenance of market in which securities can be issued and traded in an orderly and fairly manner. Yes. The protection of interest of investors. Investors should not be manipulated. I showed you many examples, even in US, how the manipulation take place. The operation of a company compensation fund to protect investors from financial loss. Okay. If the investors make a financial loss, there must be a compensation, and you look into that. The regulation of the securities market and ensure that professional standards are maintained in such market. Yes. There must be some professionalism among stockbrokers and the responsibility of advising government. Yes. So that lies with SEC. If you are a tiger, you must have teeth. If you are a regulator, you must be able to give the license and to cancel the license. Okay. So these are the powers of SEC, the teeth of the tiger. To license, to grant compensation, to suspend or cancel the license. Okay. So you can create, you can destroy. That is the power you have. To inquire into the business affairs. Okay. To advise the government. To conduct regular inspection of the activities. To require licensed stockbrokers and dealers to file annual balance sheet. Okay. Now today we talked about stocks. I want to talk in more detail next week as well regarding stocks. And there were certain areas we missed in insurance. This is why actually I gave you some questions and took about 10 minutes of your time. Anyway, I could not upload that part of the insurance. If so, I could have completed the entire insurance related area, then I could have moved easily into stocks. Anyway, I'll complete both of that next week. Any questions on this area? Stock is a very interesting area. I'll give you more and more nice examples from Sri Lanka as well as from outside, and how people made money, how people lost their money in stocks. Yes. Any questions on stock area? Okay, IPO. IPO means initial public offering. That is offering a part of capital to the general public for the very first time. Now, if you think about Apple computers, they have been doing their business very successfully, and they want to sell some of their capital to the general public. How do you do it? By selling your shares to the general public, company can get shares, capital inside. So they have to go to a stock exchange. If it's in Sri Lanka, that is Colombo Stock Exchange, and say, we want to get listed. Right. Then you have to file with SEC your intention. After this process, you can call to the general public and ask their money, and you offer them something called shares, part of ownership, the part of your ship which you sold at the very beginning, a paper, and the company will get money. So that is IPO. Read very carefully the slides I have given you. If you have any further questions, you can ask me next week. What is the difference between market crash and bull trap? Okay, now market crash is happening instantly. Let's say COVID-19, all of a sudden World Health Organization said it's a global pandemic. The day they announced that, entire world, the stock traders want to sell it now. They panic, sell it now. So that is drastic drop. I have shown you some charts, drastic drop, that is crash. After crash, now we are finding direction. Some investors are worrying, will the market rebound? So you slowly start to collect shares. Then from the lowest levels, markets start to move upward. Then few other investors believe, okay, the market is going to rebound, let's buy. So there is a small rally of collection of shares, but it cannot sustain. People are still questioning what will happen to this corona pandemic. It has just started. Now we see lots of countries are locking down. No tourism, no aeroplanes moving around, and no one is moving, no one is using petrol or diesel, and food, no production, no governments functioning. Can the market remain? Then again there comes a not huge drastic dip, but slow dip. So the upward trend in between is called a bull trap. Okay, so we have completed our 2-hour session. I know you will have a lot of questions. We'll discuss them next week. Anyway, next week, first I'll complete the rest of the insurance area. After that, we'll move into stocks. Okay, then, thank you.